Hello traders, welcome to the Macro Market FX channel where we'll be covering the forex, to futures, to stock market backed by data-driven analysis. So this week we're going to talk about gold. So as we all know that in a couple of months gold has been rising, and this was led to the US presidential election. Thereafter there was the tariff issues, the trade wars. So this led to a rise in the gold prices, which also led to the recession fears where were which lead to investors to invest on gold. As we know, gold is a safe haven currency where investors tend to run into to invest for uncertainty in the market. So this led to a massive upside in the gold where investors seek to hedge their portfolio, and this led to rise of gold price market as we all can see here in the chart. Currently, currently in the global view, there is the US government announced the 90-day pause, so whereby countries will be negotiating on the tariff issues. Well, and this week there was a great news that China is ready to sit on the table to talk with the US about the controlling their tariff measures. So this is a huge impact and will impact a lot of markets, will reduce fear to the investors, will also impact on the gold market. That's why there's a big opportunity in the gold market, a big sell opportunity in the in the gold market. And we also know that this is May. May is whereby there's a huge percent of gold seasonality, a sell of seasonality on gold. We'll talk about it later in the video. So let's take a look at the big players in the market, the large speculators, what they are their position of gold throughout this week. So this is the gold futures commitment of traders. So let's take a look at the week of this week of May, 2nd of May. Well, as you can see, currently the large speculators, when I mean large speculators, I mean that the big financial institutions, the big banks, the big hedge funds, they are decreasing their gold contracts, meaning that they are reducing their gold positions on gold. As you can see, gold was it has reduced, it has break the level of two of the 200k, whereby it was holding over here right now. As you can see, currently the market, the contract is at 160k. So large speculators are reducing their position, their buying position on the gold contracts. So this shows that there's a big opportunity of gold to come down, whereby they're reducing their position. So currently the market will also follow them, will also follow their lead. These large speculators, they play a very big role on the market direction. They play a very big role on the movement in the market. So as we can see, few months back, when they're up, you see what happened to the price of gold. You see when they were up, you see this movement here. What was happening in the future contracts, they also up. You see, but you see now they're starting reducing their contracts. They started reducing their contracts. You see how it plays. You see, so this supports the idea that apart from the tariffs issue, apart from the global economic perspective, also like speculators, they're playing a very big role. Okay, so now we are going to take a look at the open interest. Open interest. When I mean about, first let me explain what's the meaning of open interest. Well, open interest is the liquidity which is imposed in the market. It's- Open interest is the liquidity which is imposed in the market. When I mean liquidity which is imposed in the market, mean the higher open interest, the higher the price will go up. The lower open interest, the lower the price will go up. So currently on the gold open interest, you can see a big sell-off on the open interest, meaning that large speculators they are reducing the amount of money which they have injected in this commodity. As you can see, large speculators on the COT data I've showed you before. So let's take a look at the gold at the gold futures chart. Okay, it's still loading, but let's read here. Comex gold futures open interest is at the current level of 415k, down from 461k last week, and down from 516k a year ago. So you see, the currently decreasing in in liquidity in the market, it has exceeded the last year's number, which is 1516K. This is a change of negative 2.9% from last week and negative 12 from 1 year ago. So right now we are down from the last year's levels. So this shows that large speculators, they are reducing their money from the gold commodity prices. So and this report are equivalent report. As you can see, report from the commitment of traders, category, market index, and statistics. So let's take a look at the chart. You see over the July 24, 2024, see gold open interest was high, so this led to the price was high. January 25, since Trump's election, US election, you see open interest was high. So this led to also gold price to be high. You see China tariffs issue. So currently right now, the price of the open interest, which I said there's liquidity in the market, is declining. So the liquidity is declining. Large speculators also, large speculators, they're using their long positions, long contracts on gold. What do you expect to happen then? Sell off on gold or sell off on gold futures. That's what we're expecting here, as you can see. Okay, let's take a look to other concept that will. Let's take a look at volatility. As you also know, guys, volatility is the key when trading gold. Volatility is the key when trading commodity. Volatility is the key not only on gold, on the market. In order the trader to succeed, he must know volatility. And volatility has many advantages. First is a risk assessment. It helps you to risk when volatility is the risk off, volatility is in the risk off. It shows you how to place your trades, how to protect your capital, how to do your portfolio risk. So let's take a look at the volatility index analysis of this week. And it's what is going to show us. Okay, future VIX futures, COT. Okay, let's look at this week. Currently this week, the VIX futures is above the zero. Meaning, when I mean above the zero, means that is a long. That the large speculators are increasing they're increasing their liquidity, their open interest on the future. Okay, so VIX always shows the price movement, but you must know the global perspective. You must know what will drive. Will let the price go up? Will let the price go down? As you can see on the last on the last VIX performance, you can see price of VIX was coming up, coming up, coming up. As you can see also on the chart, price of this was coming up, coming up. As you can see also in the chart, these things show us. You see price of VIX was coming up, coming up. So what you do when you see the price of VIX is going up, you come back and look at the global perspective view. You look at the macro perspective view. Currently, right now, we are heading for a sell position. So this VIX above will lead to we support the price moving to the downside. So VIX for first of all, uncertainty in the market has reduced. People fear of recession has declined. The market has 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 neutralized what the tariff issues going on. Last week, China has agreed to sit with the Americans to talk about the negotiation. Not only China, a lot of countries are coming on board. So what will this happen to the gold coin, with the gold price? Meaning that a lot of investors will start removing their capital from the market. Not all of it, but start removing and keeping it to other places as other places to protect their risks, as we see earlier on the gold open interest rates. Gold open interest rates where liquidity, where open interest is coming down. You can see it is on negative 12.42 from a year ago. That's why you see, and you can see on the COT report, large speculators, they're using their gold contracts. So this also shows a clearly sign that there is a big sell position on gold. And I also say this is May. We all know future contracts traders that this is May. May is a big opportunity of seasonality in gold futures, whereby gold gold always have a sell movement in May. So let's take a look at the gold as so at one article and see. This is equity clock. We go take a look at it. Gold futures continue contract seasonality. Analysis has revealed that with the buy date of September 13 and the sell date of May 23rd, investors have benefited from the total return of 183.61% over the last 10 years. This scenario has shown positive results in 9 of those 10 since periods. So it can be May but data can prevent the market from the gold futures from falling down. That's why it has said results from 9 to 10 of those. So you must look your macroeconomic data. You must look at the data analysis to say that, oh, this is May. Will the price of gold will go down? So let's continue. Let's continue. Conversely, the base return over the maximum number of posted periods reveals a buy date of September 16th and a sell date of May 20th, producing a total return of the same year range of 159 within possible results of 10 of those periods. You see, this shows how gold is very systematic. The buy and hold return of 10 years was 125%. How to invest? Okay, so this has showed you that that go May 23rd is a good day. Is a May 1st May. May is a good month which shows there's a big gold sell off and you can start. So this shows that there's opportunity coming and on May on gold. And this is May. So we are preparing for a big opportunity in gold, as you can see. Not mean that you wait until it has reached the May of 20 is when you keep on your trade. No, as you can see, we wait, we'll see. I'll explain more on the technical analysis to see how this gold futures will benefit. So now let's look at the gold technical analysis. These are the key levels. These are the key levels which if you need to know more about them, please I've linked my Upwork link in the bio. So take a look, message me so we can talk more. These are key levels whereby this weekly level 3 is 100% that price was going to reject and come down. This is a 2%, 96%. Weekly level 1 is a 78%. So price has reached the key level is 100% to go down. Large speculators are using the gold contracts. VIX is above, shows a movement coming. It's May, seasonality of gold, open interests are coming down more than a year before of 12%. So what do we expect in gold? So here's what we expect in gold analysis. Let's take a look at the daily. See, price keep on rejecting on the red moving average, the red moving average, the blue moving average. All this, if you want to know more about this, how I do my technical, how I say that these concrete levels are very concrete, please don't forget to follow me and check me on my Upwork link. I've placed the link on the bio. So let's take a look at the technical analysis. Currently, gold is at 3243 price. And what do I expect here? You have to wait. Patience is the key. You have to wait so as to get a proper price. So what you have to wait is price to break this red line, and to retest within the price of 33233 up to at first target will be of 2838. So what to expect. So what we are going to expect. So you wait for price to break and our entry price will be around here. And we'll take it all along to here. And let me calculate what will be the risk turn from this price to this. So this shows that there's a big opportunity in the gold. As I've said, as I break down from a global perspective view, I've come down to the large speculators, I've come down to the open interest, I've come down to the seasonality in gold. So let's take a look. Approximately 12% increase on a portfolio when you take this position, as you can see. So this is a great move. So all you have to do first, be patient. Wait price to break this price here, When price break this price here, you retest. When it retests, you take your entry. And I believe gold, the first point will be around this place where your capital will grow on at 12%. So the other thing, there's a big profit of trading gold. As you also know that First of all, I need you to trade regulated brokers. For more to learn about trading regulated trading platforms, please click the bio, message me on WhatsApp, let's work together. So let's take a look at, for example, this broker here. And a lot of people currently in the market will still be looking for buying of gold buying opportunities. So this there will be a large number of investors who will lose their money. Don't know. So the key in the financial markets is the global overview. You must also know that the global overviews is what make the trends. The global overviews is everything over everything. As we continue talking to different markets, you will understand why I'm saying this. So let's take a look at the gold. Let's take a look at the gold to see when you long the gold, how much that you pay the broker when you short the gold. So this will help. If this is the key for capital preservation, this is the key of risk management, and a lot of people doesn't know this. Commodities. Let's take a look at the gold. Okay, gold. So minimum spread zero according to this trading platform. It's one of the good trading platforms I recommend. Typical spread. Here it is, long position. So right now, when you long gold, you'll be paying the broker a negative 51.7 from your capital. Meaning, if you enter on a 0.01 lot size position for forex traders, meaning you'll be paying the broker every day. The broker will be cutting from your, you'll be reducing from your capital a 0.05 amount. So you're giving a broker free money. But what it is when you short gold, as you have seen all the data below, when you short gold, the broker will be paying you 28.3 cents. So if you are on a standard lot, you'll be getting almost $0.2 a day. If you're on a mini lot, you'll be getting 0.002. So this shows that you'll not only be earning the profit from this pay, also the broker will be paying you. What's the advantage for you to know these spreads, these swaps? This shows that you'll be risk, capital risk management, and also capital growth. So look at the trading platform which you are trading. So if you need to know more about how to trade, how to trade like a banks and everything, please don't forget. I've placed my link on the bio, my Apple link. Let's work together on these financial markets. So you can see you'll also be earning a huge profit of 12% increase on your cap, 12% increase until this take profit will be your first take profit, but also the broker will be paying you. Every day you hold the trade. Maybe this trade goes for 15 days. So how much will the broker be paying you? This is what it is. So you'll have a good, huge advantage on this pair. That's what I'm saying. This is a good pair of everybody to watch out. So thank you everybody. Thank you for this week. Thank you. Please don't forget to like my video, subscribe to my channel, your notification bar for more links, for more working together. And please, I'll be dropping video every week. So turn on your notification, and please don't forget, if you want to work more, you want to know more about how I do these things and how I get these concrete levels and this moving average, calculated volatility moving average, please, my link is in the bio, my Apple link, message me, let's connect. Thank you everybody, have a happy week, see you on Wednesday for another video.